Good evening, everyone. So let us talk about the fundamental analysis of Dreamfolks, whose symbol is visible to you on the screen. Dreamfolks Services is India's leading airport services aggregator and technical platform. So like Zomato is a food aggregator, Dreamfolks is India's leading airport services aggregator. It connects, please listen to this carefully, it connects the lounges and premium airport facilities with the users of bank, credit and debit cards. So whatever credit card that you use to access the lounge, the software that connects you or your credit card to that launch software, that software is provided by, or that technical platform is provided by Dreamfolks Services. It has a very big market share, 75% volume market share in domestic airport. That means the amount of payment done for this availing this services, out of that 75% volume is with Dreamfolks. And it is the only company that covers 100% of the airport lounges in India. So it is literally a monopoly. It is almost a monopoly in this business. Now, the company is a go-to partner for the banks. See, banks always want to partner with this company because they want to provide complimentary access to paid airport services lounges, and this is highly profitable and asset-light model. So for Dreamfox, there is not too much investment in this. This is not something where it will have to create a new infrastructure or invest into creating, big bridges, etc. It is a very asset-light model. Further, increasing adoption of bank card with the launch access as a key benefit is boosting the pay-per-use revenue model of the Dreamfox. See, ultimately, whenever we want to invest in a company or not, we must look at how it makes money. So, pay-per-use revenue model of Dreamfox is very successful. Every time you access a launch, Dreamfox makes money. Now, whether you pay it, whether your bank pays it for you, that is, it is something about which Dreamfox doesn't worry. But every time you access it, Dreamfox makes money. The Indian airline industry is still highly underpenetrated and is going through rapid expansion with the growing air travel, a rising class of leisure travelers, increasing number of airports, and the government's push under the Udan scheme. And with long-term tailwinds in place, the total number of passengers at the Indian airports is expected to surge by ninefold to reach around 1.2 million, that is 12 lakh by 2040. So it is expected that by 2040, the total number of people visiting airports will rise by 9 times, around 12 lakh. That's a big number. The growing adoption of bank cards also presents a substantial opportunity for Dreamfox. See, the more number of people buy the credit cards, it is good for Dreamfox. That means many of them will buy the credit cards with a premier launch access, and that will bring a lot of business to Dreamfox. Particularly given that this segment constitutes its primary customer base. See, most of the users who basically access the you can say the leisure facilities or the lounges are credit card users. Very few are debit card users. So India has currently the credit card penetration of 3%. That means only 3% people actually have credit cards. It stands amongst the lowest rates globally for both developing and developed nation. For such a big company, it is a very small size. The ongoing growth in the card holder base can thereby expand the Dreamfox accessible customer pool. So for Dreamfox, it looks like the more number of people get the credit cards, the better it is for the company. What does Motilal Oswal Financial Services say about this? They say that we expect the company to benefit from the rapid growth in the Indian airline industry, driven by competitive fares, rising leisure travel, new airports, and government push, said Sneha Poddar, Associated Vice President, Research at Motilal Oswal Financial Services. This should help company deliver a strong 20% revenue and a 28% profit CAGR over 24 to 26, the financial years. Despite a high base, near-term setbacks due to revised airport charges and a shift to the spending-based model, Poddar said. See, we see the venturing into international markets as a lucrative long-term opportunity carrying the significant potential value. Now, the problem that Dreamfox may face, or the risk that it may face, is that, see, if the airport charges are revised, then Dreamfox margin may be under pressure. And the thing is that Dreamfox is also trying aggressively to increase its customer base, and that's why it may spend some money on, you may say, those ways by which it can acquire the customer base. So, in future, if the airport charges remain very high, it may lead to problems for Dreamfox. But then every business has its own pros and cons. So you should also keep in mind a few things before investing in this company. See, it is because it is a small cap company. So every small cap company has its own risks. I hope you know that. Second thing is the Dreamfox business model, although it looks to be established, but still the assumptions that Indian airport visitors will grow by ninefold by 2040. I mean, this is only a guess, and anything, any lesser growth will directly affect the Dreamfox business. And last but not the least, if the credit card holders in India do not rise substantially, then Dreamfox is unlikely to be able to increase its revenue by multiple folds. So these are some of the pros and cons, and this is also a case study of fundamental analysis. I hope you liked it. Thank you very much for listening to my video. Good night.